And here's where it gets really, really interesting. As I mentioned, our margin is only $1,600. Okay? I want you to take a look at this green line for a second. Because this green line is our maximum profit potential in this position. Now, if you look down here in the left-hand corner of this picture, you notice as I move the cursor around, it gives you different numbers. Right now, on total, our position is generating about $20. Actually, this is a little bit different than the monitor trade I show you up here. We're actually up about $51. But because they take into consideration the bid and ask spreads, this might be a little bit lower than what you just saw. But it's still $1,600 in margin. If you run the cursor over this green line, this is what happens when options expire. Remember, there's only two rules of the market. One is prices will fluctuate. Number two is all options expire. Well, when we put these positions on, the only thing that we're interested in is having these options expire within this profit range. We have a fairly large range that our prices can move in, and that's what I mean by the fact that prices will fluctuate. Well, prices can fluctuate up, and they can fluctuate down. It does not matter for our position. All we have to do is be patient, wait, and collect our money at the end of the month when these options expire, or just prior to when the options expire. Let's take a look at the cursor. Now, if you can see down in the left-hand corner, you can see that even at this point, if prices were to move down significantly, we would still have a profit of $1,234 on this position at expiration if prices move down. Now, we have a margin of $1,600. What kind of a return on investment is that? That's close to an 80% return on, maybe even more. If prices moved up, we might even make even more money. We have a maximum profit potential of $1,300 on this position. If you look down here in the left-hand corner, we're looking at the date of expiration, which is May 17th, not the current date, which is 4/29. We're looking at May 17th, which is the option expiration date. We have a profit potential here of $1,327.27 at expiration. That is close to a 95% investment. Now, you might be thinking, well, gee, Dave, that's great. $1,600 and you're making, $1,600 in margin, you're making $1,300 or whatever. Even if this landed someplace in the middle, you're talking not less than $1,000, anywhere from like $1,100 up to $1,300 right in the middle. So even if it went up or even if it went down, if it went way down here, well, now your profit margins are a little bit lower, but I can show you exactly what to do when you need to adjust those, so that your profit potential is actually a fairly wide range here in prices, so that the market, so you're really taking advantage of the market's fluctuations. It doesn't matter if the market goes up, it doesn't matter if the market goes down, because you make money either way, and all you have to do is put these positions on 3 to 4 weeks before they expire and just sit back and just let them run and cash in a few days before expiration. Let me show you. Let me tell you exactly what the actual potential of this is. $1,600 margin, not much. Maximum profit, maybe around $1,300. If you were to put, let's say, double that, okay, now you're putting up $3,200 in margin. Now your maximum profit potential is anywhere from $2,400 to $2,600 for only $3,200 in margin. Let's say you did 10 times that. I put $16,000 worth of margin up. What's my profit potential now? My profit potential is $12,030 in this position at that one end, and $13,375 at this end. And if it's stuck right in the middle, it's $10,335 in 3 weeks to 4 weeks. And those are not, even that's not a very large position. That's only 10 times the margin. So if you had $16,000 in margin, your potential profit at expiration is close to $11,000, $12,000 in 3 weeks. There's lots of money to be made in this kind of trading. This is the kind of trading that professionals do. They don't care if market goes up, they don't care if the market goes down. Either way, they make money. They are looking for, they pay attention and respect the two biggest truths of the market. That is that prices fluctuate, options expire, and that is exactly what we take advantage of in these kind of trades. So, I mean, with $1,600 of margin, and you can make about $1,000 a month on this, you tell me, is that a good return on your investment? I think so. I mean, you're not going to get this kind of a return on your investment under any circumstances, under any other financial institution, only doing it on your own. This is the kind of system that I do. All I do is look at it once a day. I put on my trades 30 to 40 days, 3 weeks to 4 weeks before expiration of the options. All I do is sit back, monitor them on a daily basis, and then collect the money at the end of the expiration period. That's all I do. And you know what? If you've got, if you only have a couple $1,000, hey, you can still make even if you only had a couple $1,000s of margin, look at the profits, $1,200 to $1,300 at the very worst, maybe $1,000, and the market can move up or down. It doesn't matter. $1,000 a month, only going to cost you $1,600. You get that $1,600 back in margin, plus you make the $1,000. So I don't see a situation in which you're not going to get a huge return on your investment. Now, does this always work? I'm going to say, hey, many strange things can happen in the market. There's no doubt about it. Prices can fluctuate wildly. And in those cases, then you're not going to be able to say, well, hey, maybe we're not going to have a profit. However, I'm not going to guarantee that you're always going to have a profit, but what I am going to guarantee is that I'm going to show you everything that you need in order to create an environment where it doesn't matter. Even at one point, the market ran way against me. And I had one position that was almost in a losing position. And guess what? Most traders would probably just close out that position. I turned it into a profit. There's lots of situations, if you know what you're doing, you can turn a losing situation into a profitable situation. And this is where the majority of traders in options just go wrong, because they do these one-dimensional trades. They put on either a spread, they just let it go, they don't know how to adjust, they don't know how to manage their position by the numbers, and they're not treating their investments as a business. Every business has maybe a month out of the year. The other 11 months, yeah, maybe they'll be profitable. If they're running their business the right way, you're going to make a profit at the end of the year. And if you listen to the videos and I show you exactly how I do my trades and exactly how you can do your trades too, then you're going to have the knowledge to trade with confidence. And that's what this is all about, because it doesn't matter if the market goes up or down. Even if it runs against your position, you're going to have the knowledge of what you need to do in order to turn that position around and make it profitable. So, hey, I wish you the best always. This is the real deal. This is how professional traders actually trade positions in large quantities. This is how market makers who know what they're doing and floor traders who know what they're doing, this is how they run their investment business. This is in fact, probably one of the most secret and really hidden systems. I mean, you might know how to trade calls and puts, but putting them together into an investment portfolio, into a business situation where you're only managing it by the numbers,